Welcome everyone, and thank you for joining this webinar. My name is Kim Kellaway and I'm Head of Clients and Markets at HLB Mann Judd, and I will be your moderator this morning. Firstly though, I just wanted to say to you and your teams, I hope you're coping through this unprecedented event, and we must look to collaborate to ensure our viability. Today we've brought together three of our not-for-profit specialist team to provide you with an overview of what COVID-19 means to the sector, what stimulus packages are available, and looking at the road ahead. Our agenda and our specialists. Aidan Smith, Audit Partner, Australasian Head of Not-for-Profits, will provide an overview. Mariana von Luken, Partner Tax Consulting, will go through the stimulus package. Simon James, Partner, Corporate Advisory, we'll go through cash flow forecasting, strategic planning, mergers and acquisitions. And then I'll go through Q&A at the end of our webinar. I just wanted to run through this with you in terms of our format. We will hear from our specialists, then we have allocated approximately 30 minutes for questions, which we'll take at the end of the presentation. Please type them into the question box in your Zoom control panel. If you have some issues finding that panel, just please go to the chat bar and I can assist you there. Now, during our webinar, we will also have live polls on specific topics, and you will see those, and our presenters will alert you to those, and then I'll get you to go into the poll. So let's start our webinar for this morning, and I'll hand it over to Aidan Smith. Thank you, Aidan.
Thanks, Kim, and good morning, everyone, and welcome to this webinar. Of course, this is a tremendously worrying and uncertain time for all of us, so I reiterate what Kim said. I hope you and all your families are safe and well. Now, something as big as this impacts on all areas of the business. You've got dealing with the statutory requirements, you've got asking the question how the business can continue to service the community, and there's also the financial aspects as well. The focus today is on the more immediate cash flow concerns, i.e. how to ensure your business has got enough cash to survive, perform its services, and for many of you that cash needs short term. At the end of this webinar, we want you to know that what you need to get through to get the government assistance, and now also to plan ahead from certain times through monitoring your cash flow and keeping all options open. Now, I just wanted to touch quickly on some other matters that the ACNC and other statutory bodies are looking at. HLB is a member of the newly established ACNC Advisor Forum, and we held our first teleconference on Friday last week. The ACNC are putting a lot of resources into providing resources or links to relation to this pandemic, and also working with other government agencies, including the states, the ATO, and trying to give a unified and consistent response. I think an important point is that things are changing every day, and it's critical that before you make any decisions at all, you check what the latest developments are. What might be the case yesterday might not be the case today. Now, at the Advisor Forum, there was a huge amount of questions directed towards the ACNC, and the ACNC made clear that they're very keen to engage with its stakeholders to ensure they can provide assistance and guidance during these troubling times. Some of the items that we discussed on Friday were including proposed changes to legislation. Most or all of those are being delayed just now. Anything that was planned to happen, and it hasn't happened yet, it will be happening for the time being. The government review of the ACNC, that's also been put on hold for the time being. The external conduct standards with a lot of charities and entities overseas, and there's delays in getting information back, they've raised those concerns. The ACNC are looking at this as well, and there will likely be delays in when you have to report. Guidance on employment rights. Charities are just looking at what the rights and obligations is of the charity, including the directors. What's the risk of trading when insolvent? Safe harbour provisions. Extensions of time. Just now it's AGMs that have been mentioned, and the annual information statement has been extended to the end of August. AGMs, ASIC have come out for companies, and they've said that they're going to take no action if you're 2 months late. The New South Wales Fair Trading for associations have said you can apply for an extension for no fee. And then with other deadlines, that's just something that's looking at on an ongoing basis. And we'll report to you if there's any changes in those. There's accounting and audit challenges as well. So you've got your P&L balance sheet, there's impacts on impairment of your assets. For your December year end, there's subsequent events. There's implementations of new accounting standards which are happening, for the June year ends are up now, so you've got that and this to deal with. There's going concern considerations of disclosure in the accounts. This is something that the ACNC are looking at. They're looking at along with the Accounting Standards Board, the Auditing Standards Board, and together everyone's working together to try and communicate to the market what the impact is. There's also developments with other organisations. Just a couple of days ago, the Australian Communities Foundation and Philanthropy Australia partnered, and they're providing a national funding platform for not-for-profits, and they can register their funding needs. And then that's so Australian philanthropic funders can connect with them and support important work to tackle this pandemic and support communities. So above are just some of the things that are being considered. There have been questions that have been asked, and some have been addressed, some partly addressed, and some haven't been addressed yet. And we'll keep you up to date with any developments as they happen. So that's just a quick overview. I'll now pass over to Mariana, who's going to discuss stimulus packages that the government has put on offer.
Thank you, Aidan. Hope everyone can hear me. Look, these are a bit complicated, but I'm going to try to simplify it as much as possible. And I know everyone is looking at it from their own circumstances and situations, so it can apply differently for everyone. But I think the key here is to remember when you're looking at the boost of cash flow for employers, this credit up to 100,000, really the key there is that you have to be an employer and you have to lodge PAYG withholding. So you have to be paying tax. Now, you may be not paying tax, you pay salaries, that's okay as well. But so you're lodging a business activity statement or an IAS statement, and I'll discuss that in a bit more detail in a minute. So the main thing to get out of that is you get 100,000, you get it over 2 periods. You get it from the period March to June, 50,000 maximum, minimum 10. And then you get it from July to September effectively, or October, the cash amount, another 50,000. Or if you receive 50,000 in the first quadrant, like in March to June. If you received less than 50,000, you'll get that amount. So whatever you received in March to June, you'll get from September onwards. And I'll go through a little bit of example in a minute. So I think the other thing to remember is you don't have to do anything except lodge your business activity statements or your IASs. Keep paying your employees and lodging your forms. Usually it's done through that simple tax payroll, single touch payroll, sorry, what am I saying simple? Nothing simple in tax. A single touch payroll. So what's the criteria? Now this is an interesting one for not-for-profits. So your turnover is below 50 million, and turnover, they say aggregated, but let's not worry about that for the moment, under 50 million. So what's turnover? Turnover would generally be ordinary income. So I don't think donations would come into that. That's not considered ordinary income. The question is, would grants come into that? Is that ordinary income? If it wasn't for the fact that you're not for profit. That's not been made clear. If we need to look at that further, let me know. You need to remain active for the next 6 months. And I think these measures are there to help you to remain active. In large employers with turnover greater than 50 million, which is a question mark for not-for-profits, you get nothing basically from this boost cash flow. You do get it from other things. It looks at your prior year's turnover. So it goes back to the turnover you had last year, 30th of June 2019, if you're a June year end. And it's per employer. So you may have an organisation which has 2 employers. They both get the limit of 100,000. How it works. So this one's interesting. So now thinking about it, if you're quarterly, so you're a smaller not-for-profit organisation and you lodge a quarterly BAS, that's normally what you do. You normally lodge that with your GST, your PAYG withholding, FBT if you have it, all those things. So what happens is that relates to the January to March period, salary and wages, doesn't it? So when you lodge that, that'll trigger the actual amount. So now because it covers 3 months, the amount that you have there as PAYG withholding, so the tax you pay on salary and wages, will be the amount that you get back as a maximum amount of 50,000. So for example, it's 20, you'll get back 20. When do you get it? 28th of April. Usually that's when you lodge your business activity statement. Now you might want to rush and lodge it earlier, but whether you're quarterly or monthly, you will not get it earlier than 28th of April. So just remember that. How will it come? It'll come as a credit. So, you know, if you're a quarterly BASer, I would recommend not to make your payment of PAYG withholding until you've lodged your business activity statement. Wait to see what your net effect is, because if you get a credit, it'll offset it against any other taxes owed like GST. And then the remaining amount, if there's a refund, you get that back. Now, as I said, if you're small and you don't pay PAYG withholding, but you pay salary and wages, you still get a minimum of 10,000. So that's good. And again, you know, the refund will come automatically. So it is automatic. You don't need to do anything except lodge your BASs or IASs. That's for quarterly. And I'm just talking about the first tranche of 50,000. Now, I won't go into the second tranche for a moment. I just want to talk about monthlies. So the monthly payers, you know who you are. You pay your monthly IASs, PAYG withholding. You do it through single touch payroll. You might have your payroll provider pay for it monthly. You know what your monthly salaries are. What they're going to do is for March, they're going to say 3 times the March amount. 3 times that? Great. That's the amount they're going to pay you, up to 50,000. Now, that's if you don't cover the 50,000 up to March for that 3 periods, effectively it's trying to cover you January to March, then again, when you lodge your April IAS, you'll get the difference up to 50. If you, again, if you don't get all the 50 up to that point, when you lodge your May IAS, you'll get an amount, again, up to 50. And it comes as a credit in your PAYG withholding. And it comes through your, most of you have access to portals, tax agent portals or business portals. You can see it there. You can contact us. We'll tell you what it looks like as well. Now, the other thing to keep in mind, so that just covers the 50. Now, for quarterly payers, you'd likely get, you know, you might not get all your 50 straight out. But when you lodge your June BAS, you'll get the remainder amount, up to 50,000. So that covers March to June. Okay, done, 50, boom. Now, what happens in the second quarter, they're looking at, so the payment will get, you come at about the 28th of April. So it'll come when you lodge your June BAS, or it'll come when you lodge your IAS, so your monthly, depending how you pay your PAYG withholding. Now, in that second quadrant, you get potentially exactly the same amount you got in the quarter of March to June. So if you got 50,000, you get another 50,000. The question is how you get your 50,000. If you're a quarterly payer, you'll get it when you lodge your June BAS and September BAS, and you'll get effectively 50% in June and 50% in September. So if you had received 50,000, you get 25 and 25, June, September. If you're monthly IASs, on the 28th of July, you will get an amount, 1/4 of the amount you received in your first payment. So if your first payment from March to June was 50,000, you'll get 12.5 in July. So June, when you lodge your June IAS, and that gets paid on the 28th of July, June, and then July, August, and September. So whenever the payments normally come is when you get it, 1/4, but only up to the amount that you received in the first quadrant. So up to June. So if you only receive 30,000, then as a monthly payer, then you'll get in quarters. Now, some people have asked me, you know, what do I do? Do I fiddle with the figures in March to get more? I would highly not recommend that, not recommend it, because the government will be looking at what your usual amount is. And if there's any oddities in there, like you make an extra payment or you increase your salary suddenly, it'll be very obvious. So, and there'll be anti-avoidance provisions there. So please keep that in mind. What else did I want to say? So the first cash amount for those looking at cash flow is 28th of April. It is a bit complex because there's different scenarios, but again, you know, you have us to call, so please feel free to call. I have some simple little cash flow spreadsheets that I can provide to you. ATO measures. Okay, the other thing that they're doing, the ATO, is you have to negotiate with the ATO. So it's a matter of someone from your office ringing, or it's a matter for you to ask us to ring for you on your behalf. Now, I know you don't have income tax in most cases, but what they're offering is a deferral of 6 months for your payment of your BAS or your GST effectively. So any tax you have, we can defer. It's also allowing businesses, so a lot of not-for-profits lodge quarterly business activity statements with their GST. So it's allowing you, and most not-for-profits get refunds. So what it's allowing you is to convert it to a monthly cycle. Now, there's legislation around when you can convert and not, but again, that's gone. You can just convert if you like. So from 1 April, you can become monthly and get your GST back if you're in a GST refund position. I would not recommend it if you're not in a GST refund position. Also, for FBT, they're giving an exemption for emergency assistance. So the emergency assistance for not-for-profits, if you have employees that have contracted COVID-19 and they're self-isolating or they've come from overseas, and you're assisting them with non-cash. So you're assisting them by giving them, paying for their accommodation, their meals, their foods, then masks, sanitary items, then all those things will not be subject to FBT. That's very generous of the government. That was sarcasm. Now, the big thing that was announced last night is, the only problem is I can't hear people laughing, so sorry about that. I'll come back to those questions at the end, so if you've got questions, please keep writing. Job seeker payment. This is big. $130 billion the government is going to give jobs. So 6 million employees. The purpose of this is to keep people employed. So even if you've stood them down and if you've made them redundant, maybe you want to re-employ them and just have them stand down. Doesn't mean they have to do anything, but it just allows the employer to get some money. So it's going to be cash. It'll work from, basically it starts from 30th of March, so it'll be for the April period. So the first week of May, they're looking at giving the cash out. Okay, so who's eligible? Again, this is the question. Turnover includes not-for-profits. Turnover, so employers, so again, it's the employer. It doesn't talk about aggregated turnover. I mean, lots of businesses together, if they're related. No, it talks about the employer. So if you pay salaries from 2 different companies, each one would be considered an employer in my mind until the legislation comes out. With a turnover of less than $1 billion, that's great. That's a lot of money. But you would have had to reduce your income by 30%. And again, what is reduction of income? So the fact is, what you would look at, if you looked at the period of April, 1 April to 30th of April, and again, we haven't got the detailed legislation, but just looking at it from what's been provided, you look at the income from that period, and you say, okay, compare it to the income of April last year. Is it the same? Well, you won't get anything. If it's reduced by more than 30%, so say 31%, then you would be entitled to this $1,500 a fortnight per employee. And I'll show you how that administer in a minute. If you've got a charity here over $1 billion and a turnover, again, turnover should not include donations. So the question is, what does it include? We're not clear on. Whether grants that are normally non-accessible for charities, you might pay GST on those grants. Maybe they're considered turnover. So that's more to come on that. Not today though. Also, the other criteria is the business is not subject to major bank levies. Don't think you've got a problem there. So how do you get this? You need to apply. One is you need to be on your simple tax payroll, single touch payroll. I've done it again. Single touch payroll. Basically, you're lodging your PAYG withholding in an IAS or PAYG withholding on a BAS. Okay, so that's how you get it. So you need to apply. There is an application form already available that you want to, you are registering your interest when you apply. You must report your eligible employees, and I'll go through what is an employee. So they must have been an employee from 1 March. Now, they could be currently stood down. They could have been just made redundant after 1 March. They could be current employees, part-time, full-time, etc. You're eligible. It's the amount, $1,500 a month paid in first week of May, is only given to the employers. It's done through the single touch payroll. That's how it's done, basically through your activity statements. That's where the credit is given. It's given as $1,500 gross. So employees are full-time, part-time, long-term, casuals. So if you have casuals that you've employed and they've been with you for more than 12 months, or at least 12 months, so from 1 March, look back 12 months, have they been there? Yes, great, they're entitled. Also self-employed. Don't think that applies for not-for-profits, but you never know. Need to be Australian citizen, holder of a permanent visa, a protected special category visa holder, non-protected special category visa holder, resident in Australia for 10 years, special category subclass 444. More details later. If the employee has multiple employers, now how will you know that? I think the main thing to consider is if you're giving them the tax-free threshold, and then they're effectively electing you to be the main employer, the primary employer. So the employee has to probably notify you, or you would know, or you talk to them and let them know that's the case. So only one of the employers can get that. So if a person works for, say, 2 charities, they'll only be entitled to 1 charity for this JobKeeper subsidy of $1,500 gross. If you've stood down employees, they can participate. You can still put them, they're only stood down. Doesn't mean you have to re-employ them and they have to be working, but you could stand down, but it's on the proviso that you want them, once all this is over, come back to normal business. So it helps them. If you made them redundant, you might re-employ them and stand them down, if you want to keep them. But you can't, the employee can't have both. Can't have a job seeker subsidy and also a job keeper. So job seeker subsidy, which is what the government gives you, and a job keeper subsidy. So I sort of did the numbers. So somebody that's single, that's getting the job seeker would get 1,124, where under the job keeper, the employer is going to get 1,500 and is going to pay the employee 1,500 less tax. So you have to take out tax. It's like you're paying them a salary. And, you can work it out. It's 1,500 on top of what they've already received. So if they've got, they would have had received money already up until February at least. It goes as a credit from the ATO portal, as I mentioned. So I was saying job seekers get 1,124, but under the job keepers, they get slightly more. They get 1,500 less the tax. And obviously the tax depends what their marginal tax rate is. So they are better off. And also the fact is, that you've got that employee when we come out of all this. Okay, and the government is supporting it. Timing, as I mentioned, is April. So the first week of May is when you get your cash. So you still have to support your employees for that month, month of April. Some say that, it's coming too late. Some say it's, it should be done a bit earlier, but the reality is we've got something instead of nothing. One thing to be careful of, so what you need to do, take action, register your intention, apply on the ATO website, very easy to do. You won't get it unless every month your turnover is that less than 30%. So every month they'll be analysing it. Now, how? I don't know yet, but effectively you can do it yourself. You can look at your P&L and say, okay, what did I get for this month? Income, and look at it, compare it to last month, April. Then do the same for May and so on. And then you just register your interest and then the ATO will pay you. You've got to notify the ATO of your eligible employees. So people that you had on your staff from 1 March that has indicated that you've stood down or you've made redundant and you've brought back alive. And you need to continue to provide information to the ATO monthly. Now, I think that's covered everything. There are some questions. I'll read the questions while you listen to Simon. I'm sure there's more. Thank you.
Mariana, before we go to Simon, I just wanted to just clarify one point that's come through chat rather
Yep,
than
sure.
come through questions. And it was in regards to one of the mentions of $1,500. And should that be monthly or is it $1,500 per fortnight?
So it's $1,500 per fortnight, gross, right? But obviously they'll pay you the 2 fortnights in May.
Okay, thank you for
So
clarifying
that's the amount they're going to pay, $1,500 per employee per fortnight. It doesn't matter if you didn't pay your employee $1,500. So that's another point. So if your employee got $1,300 per fortnight, they will now be entitled, you have to pass this on, you can't just keep it yourself. Now they'll be entitled to $1,500 less tax. Okay, so remember you've got to take the tax out. You're paying any normal salary and wages.
Okay, thank you for clarifying that. Everyone, some people are coming through the chat and some are coming through the Q&A. So what I will do when we come to questions and answers, I will go back through the chat room as well and ensure that we answer your questions. Thank you for that. Now we'll just go hand it over to Simon. Thank you, Simon.
Thanks, Kim. I think one of the things that's still on the shelves in supermarkets is shaving foam. If you look at Aidan and myself compared to our photos that are on the screens. So Kim, can we go to the next slide, please? Thank you kindly. So just a quick few slides just to kind of run through. So the first one is where we are now. Understand that most businesses are kind of operating from people's homes. And we know how difficult it is to run finance functions remotely. This is really putting some organizations under a bit of strain. Do you have that cloud-based accounting and management reporting information so you can access real-time information? If not, we're here to help. We can definitely assist with that. Also, another unintended consequence of what's happening at the moment is a spike in cybercrime. You'll probably see lots of things coming out around phishing emails that are coming through, but just be kind of vigilant around the controls when you are working remotely. How robust are your financial controls with teams working off-site? Again, this is something that we can kind of help with. So knowing that real-time financial position is important, there's lots of kind of judgmental items that Aidan kind of alluded to before that actually impact your financial position. One thing that we're seeing a lot of, even within our business, are employees cancelling leave. So you've got holiday provisions that are increasing exponentially. What does that actually mean and how are they going to be dealt with? So just making sure you've got a policy on that and what you need to do to enforce employees in terms of taking time off is, I suppose, critical in looking at your balance sheet going forward. Hopefully goes without saying, but please continue to pay employees and report your tax obligations. As Mariana said, that these lodgement portals are the kind of source of truth for the government throughout this crisis. So making sure that things are done in a timely basis is going to be critical. Next point is a dot point put on there is, are we solvent? For some of you, your whole business model could be on hold due to factors such as social distancing, where you can't provide the services that you normally do. Knowing the impact on revenue and cost management going forward is going to be absolutely critical, and we'll talk about that on the next slide. ASIC has said that it's going to put on hold for 6 months, freeze on directors' obligations for insolvent trading, but that comes with many terms and conditions. Directors' personal liability still remain. So if you've got any doubt at this point in time about your ongoing solvency, please reach out to us and we can advise you on the best course of action. So the poll question, Kim, I don't know.
Yes, so it's here now. So the poll question.
Yeah, so if you can let's just do a quick poll. So how concerned are you about your cash flow over the next 6 months? So if we'll put that one out to the participants to see what that comes back in. So I do realise that some of you might have received additional new funding and are going gangbusters currently. Your challenges, I suppose, are different than probably the majority, but there is definitely an opportunity to lean on other not-for-profits for help, which I will talk about a little bit later as well. So forecasting. So we're established that we can still operate our services. What's the future look like? Predicting revenue, I think, is harder now than I can ever remember. Those with grant revenue, hopefully you've received some assurances that the money will continue to flow. With any variable revenue from donations and such like, I can't believe that we're in a situation after droughts and bushfires sucking such a large proportion of discretionary donation dollars. We find ourselves with this huge spike in unemployment that will impact the level of casual giving. So yeah, it's very, very difficult out there. So the performance drivers in your revenue model really need to be reassessed. The calls to dollars ratio, where you are kind of making phone calls to get the money in, are likely to decrease, and the marketing team are going to be under great pressure to deliver. So yeah, they are going to need a lot of help and support. So where we're sitting at the moment, we're recommending reviewing performance at a micro level and over much shorter periods of time. So reporting revenue 3 weeks after the previous month end isn't going to cut it over the next 6 months for many organizations. And how revenue is reported. We've had many sessions with Aidan and Daryl before him and such like, talking about how revenue gets reported for profit under the new accounting standards. But now we're taking that off the table. We're reporting revenue as kind of cash in the door. So yes, it gets reported in the financial statements one way, but we need to be looking at it on a cash basis. And just being right at the forefront of looking at lead indicators. And they've got to be front and center of any management reporting, and probably best delivered weekly for some organizations. I put on there fixed and variable costs. As far as I'm concerned, there is no fixed cost in any business at the moment. Everything is variable. Any cash flow out of the business should be questioned. Talking to our clients, landlords have been very generous on rent. Try not to defer it, get it waived as the first point, if not defer it. But yeah, landlords have been pretty supportive thus far. But I would go through your whole profit and loss account and be asking for discounts on everything at this point in time. The new, as Mariana alluded to, the new wage keeper subsidies are applicable to NFPs and will help retain talent. The modelling of this, the availability and the benefit, as Mariana pointed to, is relatively tricky, but can provide substantial benefit to the cash flow. If you need some help in terms of that modelling and what that looks like, obviously, please reach out. That is something that we can help with to make sure that you are actually maximising the benefit there. Which comes to my next poll question, Kim. So if you can put that one up, is your forecast model robust? It has to be. If it isn't, it needs to be. So it'd be interesting to get a poll just to see how many people think that that is in a robust position.
Sorry, I'm just, okay, it's launched now.
Launched now. Yeah, this is going to be critical. So, you know, most people are talking about 6 months. The government's talking about 6 months in terms of the job keep, the wage keeper subsidies. So we can assume that we're going to be in a state of flux for this period of time. So your forecast model needs to go out at least 6 months, and it has to be pretty accurate, and it really does. The monitoring, performance and communication, I think communication is key. You know, a lot of people are kind of feeling isolated, so we've got to actually support our teams, and, you know, making sure that we are speaking to all our key stakeholders is utmost importance. The social distancing and office closures, it's just harder and harder to have those corridor conversations, those quick interactions. So it's going to take a few weeks, I think, for businesses getting the swing of everybody working remotely, but just make sure we have got formal communication plans in place and nobody's forgotten, especially staff, to make sure everyone's on the same page. Then the final slide from me. So strategic planning, it's hard at this point to think about changing strategic planning. You know, have we got a business that the strategic plan has changed, or is it just paused? Are we in hibernation? As NFPs, you're bound by your objectives. You've got cohorts that you provide services to, and that I'm sure they still have the need. So The NFP sector has always been exceptional at partnering and providing support to one another. And this could be a good time to think about combining forces with other organisations to increase impact, as yours and potentially their business models have changed. So over the last few weeks, we've been speaking to quite a few organisations looking for partners, some because they know cash flow is going to be tight and they want to ensure services are maintained. Others are looking to expand their geographical reach and have got reserves that are going to allow them to do this. Mergers can have a relatively long timeline to make happen, but can be pushed quickly. So if this is something that you're considering now, again, let us know confidentially. We've got our eyes and ears open to opportunities across the sector. And as you know, Kim's a very good connector as well, where people need help and assistance in terms of helping NFPs partner with each other. So the final poll question is, strategic merger is now a good time. And that is it from me. So I think we're going to move to Q&A, but just keeping an eye on that forecast now is absolutely critical for every organisation, especially in the NFP sector.
What about deferred tied funding from government and foundations? Is this loss of income as one has to move this funding into hibernation until July 2020?
I would think so. Devil will be in the detail. Mariana can kind of allude to it once the legislation comes out specifically, but anything that's deferred is now not income, I would think.
Okay. I'll open these questions to all panelists. So I'll let all of the panelists answer these when they can. NDIS or supported wage subsidy employees are eligible or not to receive this subsidy?
I guess the question is, are they full-time, part-time employees already on your payroll or being stood down? So we haven't got the detail of the legislation. So it's a matter of asking the question, do you already pay PAYG for these employees? Maybe someone who's asked the question can answer that.
Okay, we'll wait for that one then to come through. Aidan, in terms of that national funding platform, which I did put up on the ENFP LinkedIn yesterday, what was the name of that organisation, those two organisations again?
Yeah, so I'll give you the website link and I'll also type it up in the message board. It's communityfoundation.org.au and then /COVID-19. So I'll put that up in the chat as well, so people have all got access to that. So that's Australia and the Australian Communities Foundation for that. I'll put it up now on the general chat.
Thank you. And also too, when I send out this presentation, I'll also include it as well. Mariana, yes, we pay PAYG.
Yeah, so I mean, look, the main thing to keep in mind here, it's administered by the single touch payroll, so PAYG withholding. So if you pay any staff member, full-time, part-time, casual, that you've had for a year, they should be entitled. Again, you're going to have to register. So all this information you're going to apply. So for example, it's $1,500 a fortnight. I apologise if I said monthly anywhere, but it's $1,500 a fortnight. It's going to be paid to you monthly. Okay, so there's been some interesting questions. So one person asked is if super guarantee should be paid on that $1,500, and the answer is no requirement to pay super guarantee on that $1,500. So the example is, say for example, I've got a staff member that gets $1,500, doesn't get $1,500, gets $1,300 a fortnight generally. So you pay them $1,300. The ATO comes along, the government comes along and pays, well, it will be through the ATO, $1,500, so a fortnight. So, you know, you get that dump in your bank account in May for the month of April. Now, what happens is that if you're already paying them for the month of April, if you're already paying them, say, $1,300, you keep paying them $1,300 and the super applies. It's the top up which the subsidy will help with. So from an employer's perspective, you've got the cash of $1,500 to pay the employee $1,500, even though you've originally paid them $1,300. I know it's a mind game, isn't it? So the main thing to take away is that every employee that's on the PAYG, doesn't matter casual, part-time, full-time, will get $1,500, whether they're stood down. If they're stood down, doesn't mean you have to give them work to do, because there probably isn't any work. Just means that you now have got the cash to give them money. So they'll get it from you, the job keeper, instead of going to the government to get it. If they've already been getting it, well, that's something when you do the application, you'll advise them. So just come back to the example of $1,300. Now, you would have paid super on the $1,300 if you're paying $1,300 for someone. So you don't have to pay super on the top up, if you like. Now, another thing is, I assume that because it goes through, you know, your normal single touch payroll, is that it would go on the payment summary. I don't know yet, the legislation hasn't come out. And again, I would assume that, you know, the subsidy for the employers is accessible because you can get a deduction. So in and out sort of thing. So if you get $1,500 and you pay $1,500, it makes no difference.
Okay, I'm going to the next question. And I'm not quite sure whether it should say job keeper or job seeker. So for the job seeker stimulus, we have 3 distinct streams of business operating under the one ABN. 2 are virtually shut down, so nearly 100% reduction, but the third area is operating normally. So overall, the reduction is about 20%, not the 30%. Would we still be able to qualify on the 2/3 of operations virtually shut down?
Yeah, I think, look, without knowing all the information, sorry, I'm just getting a call in. Let me just get rid of that.
Do you want to, is that one a bit, do you want to take that one offline? Because we can
Sorry,
do
I just
that.
lost you. Hold on a minute. Are you there?
Yes. Can you
Okay,
hear
sorry.
us?
Yeah,
Do you want
somebody
to
was
take
just...
that one offline?
Oh, no, look, I think the main thing to think about here, I may not be able to answer it all, so Martin, we can always talk later. You say one ABN. I would say you're one employer. So you might have 3 separate businesses within one company. You might be a consolidated group. I don't know if charities normally aren't consolidated, so I don't think that's the case. So you're a one employer. So if, for example, it's all sitting in there within that April period, you look at your P&L and you look at the profit and loss for the period of April, that month of April, like you would do normal accounting, and compare it to April last year. Clearly, you've gone down. And that's, if you're under that 30, or you're just on 30, they probably might be okay. Then you would be entitled to this for your employees. And I guess the question is whether those businesses that you've had to shut down will now be viable if you're getting $1,500 a fortnight for those staff members you may have stood down or made redundant. Would you bring it back to life because of this? That's another question.
Okay, I'll go through the next one. In regards to the 200 million part of the package aimed at mental health, telemedicine and phone counselling for not-for-profits, how do they apply?
I don't know that. I haven't looked at that. I've really probably been focused on more on the cash boosts, but I can have a look and come back to you.
Thank you. Does the keeper subsidy apply if you have the employee using leave at this time?
Yes, so what happens is that it just applies if you've got employees from 1 March. So they're in your books. Whether they're on leave, it doesn't matter because effectively being paid salary and wages because they're entitled to leave. So for example, if an employee gets more than $1,500 a fortnight, the way it's treated is as though they're getting their normal salary and wage. So you just pay them normally like you would if you had the cash flow. So in other words, if you're paying annual leave, the only thing the government is giving you $1,500 to help you with that payment, to sustain that payment. So yes, I don't think it would make a difference.
Thank you. When you say credit from ATO portal, does that mean this needs to be paid back at some point in the future?
No, no, both stimulus. So the first stimulus that I was talking about, the 100,000, is not going to be accessible. That is like a gift. We all know what that is. So the 100,000 or the maximum of 100,000 is a gift, whether you get 10 or 100. It just means that's how they're going to administer it, through the PAYG withholding. So just how you do your payments of salary, that's the modem they're taking to administer it.
Thank you. Can the JobKeeper allowance be used to offset salary payments of employees who continue to work, or do they need to be stood down?
No, please don't stand anyone down. So it applies to current full-time, current part-time, current casual, stood down, or people that you've made redundant from 1 March, but you've re-employed them if you like, and maybe stood them down until things get better. Haven't got clarity exactly on how it works for the redundancy, but that seems like what it's looking like. So long as they were on your books on 1 March. So yes, so if you have normal employees, this is to help businesses that are currently operating, but are going to find it hard over the next few months. So that means there has to be that drop in revenue, but effectively, if you have staff, you keep paying them like normal. And if they're, as I said, I'll just repeat it, because sometimes you need to repeat things 6 times in different ways, is if you're getting 1,500 a fortnight, you keep getting the 1,500 a fortnight. The only thing is you're paying them as normal, 1,500. Now, in most cases, some employees are getting more than 1,500. So you're just paying them as normal, and you as the employer pockets the 1,500. Whether that 1,500 is going to be accessible, I don't think it makes too much difference. I think it probably will be, but you get the deduction for it as well. But you have to pay 1,500 effectively to the employees. So you can use it as part of, say you're paying them $2,000 a fortnight, you can say to them, you're still getting the 2,000, you're not getting any more, but the 1,500 helps you pay them the 2,000, okay? So that 2,000, you still have super to pay. Where an employee is earning 1,300, you get the 1,500. As an employer, you have to pay them the 1,500. You can't keep the difference. The only thing that changes is that if they were getting 13, super would apply to the 1,300, not to the extra 200. And remember, when you pay them the 1,500, that's gross. You have to take out tax before you pay them. So it works like normal salary and wages.
Donations don't count to turnover. What about bequests?
Again, probably bequests don't either, but it's not something I've looked into enormously. Obviously, you don't pay tax on them. But let me ask another question. On your bequests, do you pay GST? I don't think so. So I think if you look at it, because there's obviously income tax, there's a definition of turnover, and then there's the GST Act. What is a definition of turnover? And donations don't count as turnover, as most charities have, their income isn't, they're mainly on donations, some charities, and they wouldn't reach the 150 threshold to even register for GST. So if your bequests don't have GST, just look at it that way.
Okay, I'll come back to that then. Can we please discuss directors' insolvency duties for charities and incorporated associations? Are these covered by the safe harbour provisions? Simon?
Yes, they are, effectively. And anybody that wants to talk about safe harbour, they are quite complicated. We have got some quite good material that we can probably share as a result of this, but it's probably worth having a direct conversation on this because it is relatively complicated.
Yep, okay, thank you. All right, I've answered that. So $1,500 JobKeeper payment, is it available to the non-profits? Can employers pay off employee leave, long service leave from this payment?
The idea is that you get $1,500 per employee per fortnight. So you can pay them whatever you're normally doing. The employer is getting the subsidy for it to pay it.
Thank you.
Hope that answers your question. Let me know if it doesn't.
Yep. Regarding the JobKeeper payment, is an employer able to pay additional $1,500 to an employee who already earns more than $1,500?
Yes. So that's right. So if, for example, a person already earns $2,000 2,500 and you want to pay them another 1,500, that's really up to you. But the point of this is to help your cash flow.
Thank you. What about deferred tied funding from government and foundations? Is this loss of income as one has to move this funding to high? Oh no, we answered that. I'm so sorry. No, we've done that one. Mariana, please confirm that the turnover amount does not include donations, which will include grants, investment income, and payment for services. The key for me is donations that represents the bulk of our revenue streams.
Okay, so the legislation again hasn't come out, but it talks about turnover. So what I've done is had a look at what does turnover mean under the Income Tax Assessment Act. I'm giving you the legal definition here. So it leads you to a section which says this is it looks at turnover, and it defines it to be anything that's ordinary income. So donations are considered non-assessable and exempt income. So that's why I don't think donations, I know donations would not be included as income or turnover. Obviously your grants, potentially, yes, and your investment income, yes, and payments for services, yes, just like ordinary income.
Thank you.
I guess the key is it ordinary income?
Yep. We have one staff member.
That's great. That's okay, so long as you lodge a BAS every quarter and you have PAYG withholding. Are you paying that staff member money or not?
Thank
I
you.
guess that's a question.
The job seeker payment. Do the employees need to have been in employment for 12 months to qualify? Example, an employee 10 months does not qualify?
No, they have to be employed from 1 March. So it's only 12 months before if you've got casual employees. So that's only if you've got casual. So if you've got part-time, full-time from 1 March, that's the date. Look, 1 March. Are they employed? Are they casual? Go back 12 months. Were they employed 12 months ago?
Thank you.
That's the only one that's 12 months.
Mariana, when lodging our quarterly BAS, we do usually get a refund, and we expect to happen the same for quarter ending March. Our GST that we pay is higher than the one we receive. Will we get on top of this package of up to 50K?
Yes. So you look at your BAS and you have a GST section and a PAYG section. Look at that PAYG section. That is 3 months of salaries of tax. That is the amount that you'll get paid on the 28th of April when you lodge your March BAS. So whatever that amount is will be the amount that you get paid in 28th of April. Now, it could be that you haven't exhausted the 50,000 in the March BAS. So when you lodge your June BAS, you'll get the top up, the difference of the 50. So say, for example, your PAYG withholding was 15,000 for the period January, February, March, because you're quarterly. 15,000 will be paid to you on the 28th. And then if you look at, you've got April, May, June, when you lodge your June BAS for the salaries for that period, you'll probably, if it's 15 again, you'll get another 15. So your total amount that you get is 30. Okay, so 30 is what you received in the first tranche, first quarter. So what happens then is that when you lodge that June BAS, it'll also pay you another, how it's going to calculate it, another question, but it'll pay you it'll pay you half of the 30 in June and half of the 30 in September when you lodge your BASs. So you effectively will get 60,000.
Thank you. I look after a task force. We don't pay wages. We pay a marketing company to market the task force. We normally receive pledges. However, due to the COVID-19, we will not be receiving any pledges.
Yeah, interesting question. So that task force, I suppose, would be, they'd be getting it. So the task force will have viability. So why couldn't they pay the pledges? So that's the other question. Because the marketing company is the one that employs the people, I think. So they'll get the government subsidy. So they should have the cash flow. Will they keep paying your pledges? Maybe that's something to negotiate, because this is really administered by the PAYG withholding. So are you a single touch payroll? Are you on the single touch payroll? Or do you, pay payroll tax? And you're saying here you don't, but somebody else does. They pay salary and wages. and they're giving you a pledge. So maybe you can negotiate that they keep paying you the pledge now that the government is giving them some money to pay their salaries. That
Thank
might
you.
be the answer.
Thank you. Hence, if a casual employee leaves end of February 2020 and now is wanting to come back to my NGO because they could not get a job or been let go, who is responsible?
Well, I mean, that's up to you as an employer. If this person has been with you 12 months before 1 March 2020, then it's up to you. They've left. They left, sorry. They have to be with you from 1 March 2020. So they're not entitled to this.
Thank you. How do you know what to pay a casual on variable hours?
Well, I think that the question there is probably you're asking what a casual just works from time to time, doesn't it? So I haven't got the detailed legislation, but as long as they've been with you for 12 months and they're still with you on 1 March, your casual employee should be entitled to this. More details to come, but remember, you've got to register these people. And again, they're not looking at what you pay people. It's whether they're employed with you or on your payroll on 1 March. With casuals, you look back 12 months and say, okay, were they employed casually with me from 1 March 2019? If yes, if you've been paying casually, then they should be entitled.
But if you get the $1,500 from the government for that person, then you have to pass that $1,500 on before.
You always have to pass it on. Yes. You've
So
got,
that's
even
how
if
much
they're
you're paying
stood
them.
down, even if they're stood down. So what it does is it takes over the government seeker what is it called? Job seeker is what the government is paying those people that have been stood down effectively.
You're
Some people haven't
effectively
even,
Centrelink for them.
yeah, effectively, that's right. For those people that are stood down or the casuals that don't have any work, effectively you are the Centrelink. That's a good way to put it. So you can't get both. You can't get job keeper and job seeker. Job keeper is the employer does it. So they're moving the administration effectively to the employer.
Okay, we've got 8 questions to go, and look, I am going to see whether we can answer those, even though we're sitting at 10:30. What if you employ new people, say to replace someone on maternity leave that starts April this year? Can you get JobKeeper on them?
Look, the legislation is looking at 1 March, so they have to have been employed on 1 March, so it doesn't apply to new people at this stage.
Thank you.
But again, when the legislation comes out, that might be a good one to revisit.
Okay. Going back to the $1,300 a fortnight payment. So if we are continuing to pay employee anyway, we up their payment $200, so they get $1,500 in total, and the organisation keeps the other $1,300 from the JobKeeper.
Yeah, I mean, that's all before tax. So just remember, you've got to pay your tax. So they don't get cash of $1,500, like they probably don't get cash of $1,300 a fortnight. So just remembering that. So put that in the proviso. But effectively, yes, but that's boosting your cash flow, right? Effectively, you've had to pay them $1,300 a fortnight. So, where did you find the cash from? You didn't have it, right? Well, you're not getting donations. So the government is giving you the money to pay them the $1,500. It just happens that you might have had in your cash flow $1,300, but now you've got a bit of booster in there to make it last, because this is 6 months, supposedly.
Thank you.
The provision is 6 months, whether the coronavirus goes for 6 months, but that's what they're predicting.
Okay. Regarding the PAYG payment, is this still available if you only have 1 staff member?
Well, again, the question is, do you pay them? Do you pay tax for them? Or if you look at your BAS for the quarter of March, are you declaring a salary and wage for that person, even though if you don't have a PAYG withholding on it? You just get 10,000 minimum as stimulus, and you should be getting, because if they've been employed from 1 March, you'd get this 1,500.
Thank you. Do we calculate the fortnight from 1 March regardless of our pay period end date?
So you calculate the payment, so it'll be a fortnight from 1 April. So these provisions come into play 30 March. So you won't get anything for March, you'll get it from April. So it'll calculate, it'll be very simple, but it'll get it from 1 April to 31 March. Sorry, I just said that, didn't I? 1 April to 30th of April. It'll look at that period. So I think the way they administer it is every 2 weeks they'll give you the payment. Sorry, but the cash will come on the first week of May. So it'll make it a monthly payment for that month of April.
Okay.
But it'll be calculated as a fortnightly amount of $1,500. But again, the details haven't come out yet.
Okay, I've got 2 questions. I lodge my PAYG monthly on the 3rd month with BAS. How is this assessed?
Yeah, that's right. So if you're a monthly lodger, what happens is that, you know, you've already paid your January salaries, you've paid your February salaries, your March, you probably paid some salaries, but you may not have paid your tax yet for March. So what they do is they look at the month of March for your monthly payers, times it by 3, and that's the amount you will get on the 28th of April. So I wouldn't pay your PAYG withholding for March, because it'll come as, what'll happen is that the ATO will pick up that there's a liability of, say, 10,000, and it'll say 10,000 for the whole 3 months, or maybe let's make it 30 to make it exciting. So 30,000, it'll calculate 30,000, and your payroll will only be, say, 10 for the month of March. They'll give you 30. Because what they're doing is they're giving you money for the period of January and February effectively. But it's too complicated to say, what did you pay January, what did you pay February, and what did you pay March? And I'll give you that. Well, and that you can easily do with a quarterly payer. But a monthly, they'll say, look, just let's make it easy. 3 times the amount in March, and that's what you'll get. You know, but your payment amount is only what you need to pay is for the March period.
Okay.
But they'll offset it.
Okay, I'm going to close. I'm going to close the questions there because we've run over time. I have a poll question that I'm going to put up here. Bear with me, please. And my poll question is, I would like someone from HLB Manjut to contact me regarding, and then there is a number of issues and topics there that I'm going to launch that. I would like to thank our presenters today. I think this has been extremely informative. Thank you, everyone. A recording of the session and the PowerPoint slides will be uploaded to our LinkedIn ENFP community and also emailed to you. And we are very happy to assist and work with you through this time. So I'll allow the poll to continue. And I thank you very much for your time. In regards to future webinars, I think that these are very important and people are being inundated with emails. So I think what we'll do at this point in time that we will have a look at a schedule of webinars on the topics that we have polled, and I will come back to you shortly on those. So I thank you again. Take care of anyone. Be safe.